finally November, and it's a key part of the year for everyone. It's the month where individuals celebrate Thanksgiving weekend in the States, and it also gives individuals in colder countries a sign of a long or short winter. Within the stock market, November is a key month for businesses such as retailers. With Thanksgiving and Black Friday around the corner, it's one of the most important retail and spending events, especially in the United States. The results of sales within this weekend allows investors to have a gauge on how well the holiday season results will be. That's why in today's video, we're going to be focusing on 3 different stocks that I believe will be worth it to at least keep an eye on for the month of November. Before we go look at the first stock, I want you to punch that subscribe button down below and drop a like. Remember, I've also added links for you to get over $360 worth of sign-up bonuses down below in my bio. But with that information, let's get straight into the first stock. Aritzia is one company that I feel is great to have on your watch list. As a retailer, this company designs and sells apparel and accessories for women in North America. Aritzia is valued at a market cap of $5.44 billion and is still continued to rise. Aritzia increased its sales from $743 million in the fiscal year of 2018 to $980 million in the fiscal year of 2020 that ended in February. In the fiscal year of 2021, sales fell to $857 million due to the ongoing pandemic. But despite these fluctuations at the top line, Aritzia has managed to return close to 180% to investors since its initial market offering in 2016. The high-end design house is well poised to deliver market-beating returns to investors in the future as well. Aritzia's net revenue increased by 74.9% year over year to $350.1 million, while e-commerce sales rose to 48.7% to $134.4 million in the fiscal second quarter of 2021. The company's retail sales almost doubled to $219.6 million and were 13.8% higher compared to the same period in quarter 2 of 2020, which shows it achieved double-digit sales growth compared to the pre-COVID-19 levels. Shopify is another stock that I feel is great to have on your watch list. It is one of the most popular companies listed on the TSX. Since its IPO in 2015, Shopify has gained nearly 5,500% and is actually 3 reasons why it's still growing now. The first reason is because the e-commerce industry still has a lot more room to grow. Although it may seem like the e-commerce is a significant part of our everyday lives, it actually takes up a small portion of retail sales. In Canada, e-commerce sales accounted for 2.4% of all retail sales in 2016. By 2019, online sales only represented 4% of all retail sales. Due to the COVID-19 pandemic and the widespread business closures that ensued, e-commerce sales rose to 11.4% of all Canadian retail sales in April 2020. This shows that Canadians are becoming increasingly comfortable with the idea of making everyday purchases online. For those who are hesitant to think it's possible for e-commerce to account for a larger portion of the retail market, consider that the industry represented more than 36% of all retail sales in the United Kingdom in November 2020 and January 2021. The second reason is because Shopify's business is going off. Just by looking at Shopify financials, investors should consider making Shopify a stock to add to their portfolio or at least on their watch list for a long time. Despite the rapid growth Shopify has already experienced over the past 6 years, the company shows no signs of slowing down. In 2020, the company reported 86% year-over-year increase in its total revenue. Shopify then followed that performance with 110% and a 57% year-over-year increases in quarterly revenue in quarter 1 and quarter 2 of 2021. In addition to its e-commerce business, Shopify has began to expand into different industries. In 2020, the company announced that it founded an esports team. This exposes Shopify to rapidly growing esports industry. Shopify has also created a film and TV production company, giving exposure to the media and entertainment industry as well. It's clear that Shopify aims to redefine what we think of an internet company and be well diversified across all industries, much like a portfolio should be in investing. The third reason why I think that you should add Shopify to your watch list is because it has a world-class management team. Shopify's executive team is truly exceptional. Its CEO, Toby, founded the company in 2006 when he struggled to find an adequate e-commerce solution to sell snowboard equipment. Since then, the company has grown to become one of the largest and biggest facilitators of the global e-commerce industry. Toby confirms with his board of directors each year that he feels he's still the best person to run Shopify. If they ever feel otherwise, he's completely willing to step aside to ensure the company stays on track. An important factor to consider as well is their previous Black Friday and Cyber Monday sales during November. They set a Black Friday and Cyber Monday record totaling 5.1 billion sales in US dollars. That performance indicated a 76% increase in sales year over year. The COVID-19 pandemic has also helped consumers become much better acquainted with shopping this Black Friday weekend. There's a good chance that many consumers may double up and check on online stores as well and just get on the deals. And this is why I think November should be a great month for Shopify. The last stock that I think you should add to your portfolio, or at least your watch list, is Amazon. In recent financial news, their quarter 3 results fell far short of analysis estimates. They got higher costs due to labor shortages and global supply chain disruption, and this stood out as the biggest issue. Fortunately, I still think what Amazon is doing in response to these challenges highlights why this stock is still great to buy for November and actually to hold forever. Their CFO, Brian, said that in Amazon's quarter 3 conference call, they see themselves as a shock absorber, absorbing a lot of the costs so that customers are not impacted and the sellers are not impacted. He also added that most companies would delay shipment or incur other fees that would be detrimental to the company. This type of focus is important, and it differentiates why Amazon is way better than their competitors. This guiding philosophy extends throughout the company's operation and into its research and development. It's what has made Amazon highly successful so far. This is what enables the company to continue in its winning ways and having competitive advantage over all competitors in its industry. There's also a lot of opportunities for Amazon to win as well. E-commerce is still just a reflection of their total retail sales. Organizations are also looking at AWS cloud services, their gaming and healthcare, and many more industries where they've shown that they had a tremendous growth potential. Amazon is always looking for more opportunities to grow and build a better competitive advantage to their competitors. After looking at the 3 stocks that I've focused on, it's important to do your own research and due diligence if you're considering to purchase these stocks and adding them to your portfolio. Some honorable mentions for this video include PayPal, Apple, and Microsoft. But with that being said, remember to punch that subscribe button down below and drop a like. Feel free to comment if you agree with my picks, and if not, let me know which ones you think will be better choices or you like better. That being said, join me next time where I'll be talking about my 3rd update in my weekly update dividend growth portfolio. Bye for now.